Hey, what's up, guys? It's Jonathan here. So, you guys might have noticed that I'm not in the normal place that I usually film. Well, I'm actually currently traveling right now. But, anyways, the matter on hand, inflation. We all probably heard about the incoming inflation crisis and how we're going to see massive inflation in the near future. And I know that some of these economic concepts can be very confusing. So I decided to make a video where I go into more detail about what the inflation crisis actually is, and I'll actually give you some strategies on how to invest during this time as well. So hit the like button. If you haven't subscribed yet, subscribe, because YouTube has told me that about 98% of you that watch my videos don't subscribe. And let's get right into the video. So let's first start out with, what is the inflation crisis? And basically, to understand this, we have to go all the way back to the beginning of 2020. So obviously in the beginning of 2020, that's when the pandemic started. And when the pandemic started, that caused the economy to shut down very quickly. Due to the lack of knowledge of the pandemic and a lot of fear in many different sectors of normal day-to-day life, it caused the economy to contract very quickly. And this quick contraction sent a lot of shockwaves throughout the economy. To respond, the Federal Reserve used almost every tool they had to try to combat this slowdown in the economy. They cut interest rates to near zero to help stimulate cheap borrowing to stimulate the economy. They also started using lending facilities to buy corporate bonds. And by doing this, they gave the market more liquidity, and they also backstopped a lot of loans that banks had made before the pandemic started. And this gave a lot of reinsurance to the economy. And to top this off as well, Congress also stimulated the economy through direct payments and forgivable business loans. And due to all the spending that Congress had allocated, it actually caused our money supply to jump pretty significantly. It's believed that about 20% of all the money that's in circulation right now was printed in 2020 alone. But ever since late 2020, when a vaccine came out, it's caused a very quick recovery in the economy. A lot quicker than a lot of experts thought that would happen. Because of this quick turnaround in the economy, it's actually caused a lot of people to be fearful that we might see some massive inflation in the near future. And some of the effects of a high inflationary period is the devaluing of cash. So typically, following the basic laws of supply and demand, the more there is of something in the marketplace, the less valuable each unit becomes. So if there's more money in the system, that means that each dollar that's in the system becomes less valuable. And the Federal Reserve actually, even during normal economic times, will do this as well. And they purposely seek out inflation because how developed the U.S. economy is, it's a very deflationary economy. Because we have technology and every year we become more and more efficient as human beings, we actually cause deflation. So the Federal Reserve combats that by printing more money. And they end up not only getting rid of deflation, but actually creating a slight amount of inflation. And their target's about 2 to 3% every year. Also, another side effect of high inflation is that it causes higher interest rates. Pretty much high inflation shows that there's too much access to cheap money in the system. So to combat inflation, what the Federal Reserve may do is they may raise interest rates. And by raising interest rates, they're basically almost kind of pouring a bucket of cold water on a fire. And this is done so that the economy doesn't overheat itself. Another effect of high inflation is that it makes debt easier to pay off. So let's say that you borrowed $10,000 in 1995. And let's say $10,000 in 1995 has the same buying power as $1 million today. Well, here's the thing. If you get a loan in 1995 for $10,000 and you pay it off today, because the dollar is worth less, it actually makes the debt easier to pay off now than it would have been if you had to pay off in 1995. What we've seen over the past year with the pandemic is that the pandemic has actually damaged a lot of supply chains. And this makes sense because people have had to socially distance. A lot of factories and manufacturing plants are not running at full capacity just yet. So this is causing a lot of damage in supply chains, and this is why we've seen certain goods like food prices skyrocket over the past year. Now, since you know what the inflation crisis is and some of the effects of it, and let's go over how I think you should invest during this time. And just to make things clear, I'm not a financial advisor. I'm just some random guy on YouTube who you don't even know if he's wearing pants or not. So take it for what it is. It isn't financial advice, and I would encourage you to talk to proper professionals if you do seek financial advice. But here's my take on it. So when it comes to stocks, there's two different types of stocks. There's growth stocks and there's value stocks. I think that if we do see inflation, in the short term, if we have high inflation, these stocks will get affected very badly. And this is because of their high debt ratios. And because in a high inflation environment, interest rates tend to go up, that means that their borrowing costs, that these companies' borrowing costs will go up as well. And also, these companies will also struggle because in a high inflationary period, money that you can make today is way more valuable than money you can make in the future. So a lot of these growth stocks, which are priced in for their projected future earnings, will actually suffer because people are going to be more concerned on how much money they can make now than in the future. But in the long term, inflation also does cause the price of goods and services to go up. So a lot of these companies will actually probably still do well in the long run, as their revenues will go up as well. When it comes to value stocks are stocks kind of like, for example, Walmart. They're companies that are not very heavy in debt, and they're cash flow positive. And I think in the short term that these stocks will actually do very well in a high inflation environment, just due to the fact that they actually make money today and that they pay out dividends. And like I said, money today is more valuable in a high inflation environment than money in the future. And in the long term, I think that these companies will still do well, but they won't do as well as growth stocks. And the very highly indebted value stocks, kind of like a lot of these travel stocks that have had to take out massive loans to just stay afloat during the pandemic, I think those companies will get hit hard in the long run if we do see inflation, just because the debt does become more expensive to service, and demand for something like travel probably won't pick up immediately. It might take a couple months to even maybe a couple years for it to finally go back to 2019 levels. When it comes to cryptocurrency, I think that most people see cryptocurrency as a hedge to inflation. So if we do see high inflation, I think cryptocurrencies will do very well. I think a lot of people will place their money into cryptocurrencies just to hedge themselves from a high inflation environment. But if we don't see inflation, I still think Bitcoin will do well. It just won't do as well. We'll probably see Bitcoin go up more in a more stable manner than we've seen it in the past year or so. When it comes to real estate in a high inflation environment, people who have real estate that on fixed rate debt, that cash flows will do very well in a high inflation environment. And again, this goes back to what I was saying about debt and inflation. If we have high inflation, it makes debt a lot easier to pay off. So if you own real estate, that should be your focus, is on getting fixed rate debt and having cash flow in properties. Also, a good thing with high inflation is that your cash flow on your real estate will actually go up as well. If we were to see high inflation, most likely what would happen is that interest rates will shoot up, and that will cause a crash in the housing market, because prices will go down. And this has to do with the rule of 10x in real estate, where if interest rates go up 1%, prices of real estate go down 10%. And my take is that I don't think we're going to see high inflation. I think what we'll see high inflation readings when we compare the next couple months of this year to the same month of last year. And that's just due to the fact that we went through such a fast appreciating market back in 2020 that it will seem like we have this jump in inflation. But over the long term, I don't necessarily think that this is going to keep up, and I think it's going to mellow out after the next 3 or 4 months. And a lot of this thinking kind of follows what the Fed has said, that they believe that we're going to see high inflation readings in the near future, but in the long run we're going to be on track to hit that 2 to 3% target. And also another reason why I don't think this is going to happen mostly is because of the respect that the USD still has. It's still seen as the world's reserve currency, and there's still a lot of currencies out there that are still pegged to the dollar. Most world banks aren't necessarily concerned with this high inflation coming. So could we see high inflation numbers in the future? Maybe. But it's not a guarantee, and honestly, even if it does happen, I don't think I'm going to change the way I invest. I'm still going to focus on buying growth stocks and undervalued real estate, and just focus on that. And just keep moving along with my investment plan. So I'd like to thank you for watching. If you enjoyed this video and you like the way I explain things, I encourage you to hit the like button down below. Also, while you're down there, subscribe and turn on the notification bell so you get notified every time I post a new video. I know about 98% of you guys are not subscribed, so go down there, hit the subscribe button, hit the notification bell. Also, while you're down there, leave me a comment. Let me know what you think about inflation. Do you think that inflation is coming, or do you just not think it's going to happen? Also, follow me on all the social medias. I try to post there every day. And thank you for watching, and until next time.